Hello Maverick traders and welcome to another trading skill development, this time specific to the long calls and long puts using the Tradebench software. So folks, you're probably pretty familiar with the Tradebench software as far as how you can put in specific brokers, labels, strategies, checklists, templates, so on and so forth. If you guys have gone through the Market Masters sequence, which I'm sure you have, then you understand labels. Let's go ahead and click on these. This is where you put in all sorts of the different types of chart patterns. I have here a group of the things that Maverick actually teaches. Ascending triangle, bear rally, bull pullback, some consolidation, double bottoms, descending triangles, so on and so forth. These you should be familiar with. Also note, folks, that if there's any sort of pattern that you have found or that you want to watch based on outside reading or outside resources, please just put them in here. It's a very, very simple thing to do. The only thing you're trying to do is add a label to where when you click this button, it can organize it as such. So that way you can find, hey, how many ascending triangle patterns did I trade? And how did I do on it? By a simple click of a button, you can find out your success or, or your fail rate based on it. So that's your labels part. Now what I'm going to do here is I'm going to move us a little bit deeper into the Tradebench software, and I'm going to go to strategies. Now strategies are a little bit more specific because you can add what's referred to as checklist to each strategy based on what you want to put in that checklist. So you guys can see that I'm pretty much ahead of the curve. Right now we're teaching about the calls and puts, and you can see them. They're both illustrated here. Let me get my pen here. Here's my long call and my long puts, but I've also got a whole bunch of other things that you guys are going to learn as you go through the progress. The vertical spreads, versus credits and debits, butterflies, calendars, all the non-directional and directional options, so on and so forth. But we're going to focus specifically on the long call and the long put. This software is pretty basic. It doesn't really allow for multiple options legs. It's not as complex as most softwares when it comes to tracking the option side. However, I found kind of a workaround that I'm going to share with you today and in the subsequent classes based on each strategy. So let's start with the long call. Now folks, it's pretty easy to do because if you haven't put it in here, you just go to add strategy and you type in long call and then you give it some of its parameters. I'm going to go ahead and click on edit so you guys can see what I've built for my long call, which I went ahead and typed in long call strategy source. I just left it blank. Active strategy, you can make it active or inactive based on what you want to pull up when you go to make a trade. We'll get to the difference between a trading without a plan and trading with a plan because they're going to be specific to if a trade is triggering or if a trade is not has yet to trigger. So keep that in mind. There is no checklist for the strategy. I wanted to spend this class to actually develop and build a checklist based on, if you can see, that I have actually taken from our homepage here, and I've actually copied and pasted the long call worksheet. It makes things much easier. This is kind of a fun thing to do. If you guys don't know how to do it, there's a few ways to do it. I'm going to go ahead and go to our website now, and all I have to do is just go to our training center. Let's go to the long call and long put. And what we'll do from here, I'll just go to the directional options, and I'll just go to the Unit 1, Directional Options 1, Long Call, Long Put. And you can see that I have here a Long Call, Long Put. I've got the strategy setup sheets, both for Maverick, listed just below the workbook. So folks, here it is. What I like to do is go ahead and just kind of zoom it in so it fits the screen. Most of the time you can right click and copy. If not, folks, I don't know if you have this, but this is a cutting tool. And so what I do is you can click this cutting tool, and you can select this area, cut it, go back to here, select it, and click copy paste or Control V if you guys are using PCs. So it's pretty awesome. So this is a really cool way to actually just stick this in. Now you've got access to it. And you can see that, hey, here's my entry criteria, so on and so forth. But however, if you don't want to do this, what we can do is add checklists. So I can take this entry criteria here that you guys are using selecting the boxes and putting things in based on the PDF that we provide on the website versus, okay, how do I carry this over to Tradebench? Well, I can build this exact same thing in a checklist. So let's talk about some of these points. We've got here, and I'm going to make a note so we can do this live. I could say buy, plus 3 weeks out. I can add strike price delta is greater than 60. And then I'm going to go open interest is also greater than or equal to 100, so on and so forth. So, those are a couple things we'll start with. The bid-ask spread is nearby the bid-ask spread, so on and so forth. But I just want to make sure we can add this to a checklist. So the next thing I want to do is I'm going to go ahead, and since this is a long call, I'm going to get out of strategies. I'm going to go to checklists. Add a checklist. Now this checklist is going to be very specific to long calls. Okay. So I want to edit. Then I'm going to go ahead and click edit to add a parameter to the long call checklist. So this asks, okay, add new checklist item. Yes. I'm going to go ahead and add, and this description is going to be by, let's see what we care, plus 3 weeks out. And this is going to be manually checked. Now, folks, you have the opportunity to actually use auto check the price, auto check average daily volume, some things if you actually pull the specific stock symbol from the internet. Now, when it comes to the workaround, when it comes to using options, we will not have that ability. So go ahead and select manual because this is something we're going to look at that point. So by plus 3 weeks out, we can leave that as above. It's not going to make a difference. If auto check choosing number of days, we can leave that blank. But we need to make a little bit of we can make some notes there. But it says by plus 3 weeks out. It's pretty self-explanatory. If you guys want to make more notes, you could say, let's make sure that the option expires more than 3 weeks out. You can get as specific as you want. You can actually get a lot more detailed than this. I'm just going to give it very, very basicness, very, very basic, so we can continue with the example. So I go ahead and hit submit, and it's going to add a checklist item to long calls. Now the best is we're going to go ahead and we're going to edit it again because it says add new checklist item to long calls. You can see here we have by plus 3 weeks out. I'm going to add a new one, and I'm going to add this one as delta greater than 0.60. And once again, I'm not going to write comments because it's pretty self-explanatory. Make sure that you select manual. I'm going to go ahead and submit. Okay, and it's going to take a minute. Little wheels are turning there to make sure that we get this submitted, because this is what I'm doing here is I'm building a checklist which is titled long calls, and I'm going to add it to the long calls as something that we need to check to make sure that it is going to be something we can trade. So we can see that we have two items. By plus 3 weeks out, delta greater than 60. I'm going to add one more just for fun, just for this class. You can add as much as you want or as little as you want. I'm going to say open interest greater than 100. Okay, and that's going to be manually checked. Hit submit. It takes a little bit to build, but folks, one thing I want you guys to realize is this can be very, 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 very unique and specific to the trader's needs and what they want to see. These checklists are something to remind you of, hey, did you check this, that, or the other? You don't have to build a checklist if you're following along with what the Maverick plan is, and when you go through and copy and paste the worksheet, that's fine. This is just that extra thing to where you can, kind of add whatever you need to a specific area. So now that this is all saved, I can go back to my checklists, and I can actually go to configuration, find my strategies. I'm going to scroll down here to where I built my long call and hit edit. And all of a sudden it says checklist to use for the strategy, long calls. Boom. So that checklist that we just built is now going to be, and you're going to see here in a second, in my strategy list. So I'll hit submit. So now the next thing we need to do, since we've built this, now folks, I know that you see a lot of these strategies that I built. We're going to do these in subsequent classes. Let's focus on the long call. It's very easy to do. Let's go back to finding a trade. So guys, I'm going to bounce to my Thinkorswim. I'm using Thinkorswim. I found myself a trade. This is a trade that's actually showing a little bit of a high base action. I can see that it's actually broken above a previous day's high. There's a couple of ways I can do this as I shrink this down. I can trade based on, let's see if I can draw a line, if it's going to break out above a certain resistance level. If I can drop that line. So, hey, maybe it breaks above the 71.25 area. I'll wait for it to break out there, and then I'm going ahead and purchase the position. Or I can purchase the position right now because it is technically trading above a previous day's high of, let's find what that is, of $70.41. So it is definitely above that, trading at a high of 70.76. Currently it is at 69. Oh, that's the low. So it's currently at 70.67. So there's two ways to do this. If this is a trade, and this is going to carry forward, folks, when it comes to trading all sorts of different types of strategies, so on and so forth. It just depends on, do I want to get it now, or do I want to wait until it gets above the 71 mark? If you want to get it now, and I'm going to go ahead and skip forward here real quick. I'm going to go to my trades. Now you have a situation here where, if you can see my cursor, it says using existing full trade plan, and then you could say trade without a trade plan. You're always going to be implementing the trading plan that you're building with Maverick when it comes through the PDFs that you're filling out per class, per course. You're always going to be using that. Now, when it comes to this is a preemptive position building, waiting for confirmation. This is using existing full trading plan, or without a trading plan, something that's triggering currently based on what you expected to happen. So let's say I want to use my existing full trading plan. It's going to ask me, you need to do a new trading plan, or you can do a new trade without a trading plan, which is the choice that I had previously. So if I do a new trading plan, this is going to ask me to build a specific plan based on what I'm seeing in the stock without it triggering. So if you and I are waiting for this to break above the $71 level, we have the opportunity, using the Tradebench software, to build this plan. And what we can do is, once it's triggered, then we can go back into the plan and submit it as a live trade. Okay? So folks, remember, I'm just going to go ahead and go back. This is called a new trade plan. I'm looking at a stock, ABC stock, XYZ stock. I think it's going to trigger once it gets to this point. It's maybe 1 or 2 days away. Let me preemptively build a plan. I want to get in when it does this. This is the stock, the options I'm going to buy. This is where I'm going to put my stops if I'm using them. This is my position size. You can build the whole thing and keep it as an existing or active trading plan, but without submitting it. Now, if it is a stock that is triggering immediately, let's go ahead and go back to this. If this is a stock that, hey, it's above the previous day's high, I'm going to get into this right now, right this second. Then you go ahead and create new trade without plan, or from the trades plans, you'd put without trade plan, enter trade without trade plan. What this does is this allows you to build it the same way, but once you go down here, you can submit the trade. It becomes live and active, and it's the reason why you got into it. So let's say that you got into an ABC stock. You already know the cost. You already get into the position's active. You want to go here. If it's a trade that you're looking at that might happen over the next few days, then you go to use existing full trade plan, new trade plan idea. Because what this is saying is, I'm looking at ABC. It might trigger. It might be this, so on and so forth. There's relatively no difference between those two. There's things you could put 3 or 4 or 5 of these, and once one triggers, you can actually go back to it and trade it. It's actually pretty cool. So what I'm going to do is I'm going to give you both examples. The first thing I'm going to do is I'm going to use this example, which is the long call right here at about, we'll see if it breaks 71. We're going to get into it. Okay, so this is something we're going to build, but we're still waiting for it. Okay, we're still waiting for it. So the only difference is I'm going to go to my use existing full trading plan. I'm going to build a new trade plan specific to this stock. Now this stock, folks, let me pull it back up to make sure I've got it correctly, is CERN. So I'm going to type in CERN. I'm also going to put a dash. Now, one thing that's tough about this, folks, the Tradebench is not specific to options. It does not support options, weekly expiration, regular expiration, or anything past that. So we had to become a little bit creative when it came to putting these positions in. So I'm going to show you the first position based on what could be trade plan building of what we want to see in this stock and what we're waiting for. So I'm going to type in CERN. Now I put a dash there because guess what, folks? Now we have to actually find a trade using what you've already learned. Let's get to our Thinkorswim and build a specific trade. Now, folks, we have a high base. It looks to me that if it breaks above the 71 mark, we could get a move to the upside using a straight call based on whatever parameters you want. You can draw since I have this highlighted, let's see if I can draw a trend line. I don't think it'll let me. Let me try it again. Okay, so if I draw a trend line from this point up to, continuation, I have myself some sort of targets. I've got up to 76, I've got 74, 72, so on and so forth. This just depends on my expected time frame. Folks, TEST, time, entry, stop, target. Okay? Time, entry, stop, target. You have to have a time frame when it comes to options. So you can do a projection based on, a directional line. Let's go ahead and clear this draw set. And let's do another one that's a little bit more popular. We can go to the Fibonacci's. And I could start from this point. I'll go back down to a major support level at around 66.88, 67 is what I wanted to call it. And this gives us some Fibonacci's. I can zoom in a little bit here and see what they give us. There we go. So I've got a breakout of about 71.26 is what it is. The 161.8% on the Fibo is a 73.97 target. So I've got a couple of targets we can do based on Fibonacci's. We can do projection lines, so on and so forth, folks. This is not this class. You guys already know how to do that based on the Market Masters. So let's take what I have in front of me, this just to make it easier a little bit. When it comes to numbers, I'm going to use the 161.8%. When it comes to this, I'm going to call 73.97. Let's call that a $74 target, just to make things easier on math when it comes to the projections of the expected move in the stock. So I've got a $74 target, okay, and I've got a position that I really want to get into. So let's go to Analyze. The next thing we need to do, folks, is go to our simulator trades, or excuse me, our options chain, and find something that fits the criteria based on the rules of the underlying stock. And what do we do from here? Well, we know that in our checklist, I don't have to go back to it, but I can just go to this. We need to buy at least 3 or plus weeks out of time. Okay? And we need at least greater than a 60 delta. So let's find those. Let's find those right now. Let's go to 3 weeks of time. 17 days is not 3 weeks. 45 days looks like it is. So we're going to deal with somewhere in July. Okay? So we've got our 3 plus weeks in time. The next thing I'm going to look at, folks, and you can do this. See, I got delta, gamma, theta as a choice. My delta is on this side, and since this is a long call, I look for the first strike price above 60, and it looks like it's going to be the 67.5 strike price. So if you guys already know how to play with Thinkorswim based on the classes you've taken before, I've got a 410 by 430. I like to split that, which means my cost should be right around 420. Just click on Buy. Let's go to the risk profile. Make sure the first thing we do is let's knock this down to 1 to keep things all the same. And I'm going to change that to 420 because that's about where I know I'm going to be. So here's the risk profile for buying the long call that expires in July at 67.5 strike price. I'm going to shrink this in a little bit, folks, because there's a few things that we're going to deal with here when it comes to our expectations on the overall chart. So let's go back to the chart, and we realize based on the Fibos that my target's about 74, right? So the 74 target. Now, we need to decide how many days it's going to take. Based on the choice that we have when it comes to the strike price, we have 47 days, right? 46 days. Sorry, let me go back to it to find out exactly. 45. we got 45 days. I don't think I need all those days. In fact, folks, based on this chart, I'm thinking I need maybe 20 days. Let's call it 20 days. I need 20 days. Okay. So here's the cool thing is I just came up with that. It doesn't matter how you guys have your own risk parameters, your own outlook. Just understand that I thought it's going to take 20 days. So let me go to my risk profile, and I've actually got to take a look at this guy on day steps. I'm going to give it 4 day steps. I'm going to keep those things pretty tight, maybe 10 days out a piece. Because 10 days out from today, which is, let me get the date today, which would be the 14th. So I need something that's going to be close to the 14th. So I'm looking for, if you guys can see my cursor, this turquoise line. That from January 4th to January 14th, that's 10 days out. I'm sorry, I said 14 days, didn't I, folks? Okay, let's do that. 14 days would be the 18th. So let me change this to where I get the 18th down here. See what I'm doing? I'm increasing or decreasing. There we go. Now I've got the 618 number. That's exactly what I'm looking for. So I'm going to focus more on this line as I move my cursor. Now, one thing I love to do is use my price slices. So I'm going to go my price slices. I'm going to say my target was $74. There it is, right there. So I know that at 74 bucks, put my cursor on it. That middle line, which is red, it says 250, 253. Excuse me. Let me move that over. And now you can get kind of close. This is going to be a gray area, so let's call it 255. Okay, 255. Now 255 divided by 100 is $2.55. So that's a $2.55 gain from the cost basis of 420. So I take 255 and add it to 420, and I expect $6.75. I expect the options to be worth $6.75 on the 18th of June if the stock is around 74. Now there's a gray area here. It could be more, it could be less. The most important thing to realize, folks, is our target is 74. Whether it gets there in 6 days, 2 days, 14 days like we're expecting, 21 days, it doesn't matter. If you guys take a look at this box as I put my cursor over here, and on the 11th it'll be worth 261, on the 18th it's 252, on the 25th it's worth 244, so on and so forth. It doesn't matter. We need to focus on what is the option worth at the target, and we need to execute it, meaning close the position. So $6.75 is what the difference was between what it's worth here and what I paid for it. So let's jump back to our Tradebench. Now, guys, this is going to make a lot more sense as you get through all of the non-directionals, the verticals, the diagonals, the credit, the debit, all sorts of different things. So just stick with me here, guys. This is how we log it in. I don't need this because I've already logged everything in. Let's go to the Tradebench. Now, in the symbol, I typed in CERN. Now I'm going to start to enter the specifics of the option we chose. And let me go to it. If you guys look down here, we want to buy the July 19, 2019, 67.5 call for $4.20. So I simply jump back to my Tradebench and go CERN dash July 19 space 2019 67.50 calls. That's it. Now the next thing we have is a multiplier. Now folks, I've gone back and forth. This multiplier will work. If I put in 100 here on the multiplier, I'm going to make sure that when I go to my position, it's in ones. Like one contract would be 100 shares. If you leave it at 1, which is defaulted to, then you just simply type in 100 on the quantity per contract that you have. So if I've got 5 contracts, I type in 500. However, if I decide to do the multiplier by 100, I go down here and type in 5 in the contracts instead of 500. I found it's easier just to leave it at 1. It makes it easier for the software. Sometimes it likes it better than others. Another thing I'm going to tell you guys as I'm going through this, if you click to the next box, it's better than hitting enter. If you hit enter, sometimes it submits the order before you're finished building it. So keep that in mind. Now this is where it gets tricky when it comes to options. the direction, long versus short. We have found that when we use the long button, it's going to be for debit positions. Long calls, long puts, vertical debit spreads, butterfly spreads, but credit spreads would be short. Condors would be short. Things of that nature is going to be short. So here's the difference. Instead of just up and down, direction is long and short. When it comes to the options, we got to be a little bit more savvy with this. Now, folks, if you don't pick this up in this class, that's fine. We got subsequent classes that I'm going to remind you which is long and which is short. So this is simple because this is long, and I'm going to go down here, and you can see that I have call. Now, folks, remember, I have all these strategies pre-built, but folks, I'm going to rebuild them with you each class. Don't worry about it. Here's long call. Notice as soon as I selected it, look what popped up, my checklist. And this is cool because it'll say it's not fully checked. Well, is it 3 weeks out or greater? It is. Is the delta greater than 60? It was. Is the open interest greater than 100? Well, folks, let's check it because you know what? I don't remember. So I'm going to go here, add simulated trades. And I'm going to switch this out to next, bid, ask. Oh, well, I got to find out. Let's see, volume, open interest right here. Open interest. Oh, it's only 15. So, right, this would not qualify because it's not over 100. I'm going to supersede it. But isn't that nice that you have the checklist to remind you? So what happens, folks, when I know that an open interest is less than 100? I know that this bid and ask is going to stay pretty wide. If the open interest is higher, the bid and ask stays tighter. This is actually a 20-cent bid-ask spread, which is pretty big. It's a 0.5%. You know what I mean? So take it for what it is, but it might be worth trading. All right, so we've checked that as well. Okay, so I'm just going to go ahead and check it, and that's fine because what's cool is once you fully check it, you can see over here in checklist it says OK. Now, you can make this checklist as deep as you want, folks. I just added a few things that are on the Maverick checklist. You can add whatever you need to see. You can say 20-50 crossover. You can say uptrending, downtrending. You can add anything you want at this point. It's up to you. The checklists are great, but make sure you make them specific to the long call, to the strategy itself. And folks, I'm going to build a checklist with you every time we get into a new strategy. Okay? So keep that in mind. Now, the next thing is we got all sorts of things we have to add. Now, you guys understand and you guys learned how to put in your broker. I'm going to use Thinkorswim. Now, Thinkorswim is a broker that I use that is going to be 75 cents per contract, a $6.95 flat rate passed. So, I've already programmed this in. If you guys don't know what I'm talking about, go back to the initial Tradebench introductory video and watch it. So my planned entry price, now guys, this is where it gets tough, has to be the options price. And this means options combo as well as you guys move forward. So let's get back to our Thinkorswim. Let's go back to the risk profile. We'll go down here. I'm looking to enter this at $4.20. So let's go back and put in $4.20. Okay. Now, my target price is going to be even trickier, folks, and this is where you guys have to do some math. It's worth it once you do it. Now, my target price, guys, I already moved my price slice to $74. Now, my price slice is at $74. I am thinking 14 days from today, correct? 14 days from today, we actually move this metric to 7 days out so we could get this number. 6/18/19, which is 14 days from today. So I'm going to put my cursor as close to $74 as I can. I'm going to read $253.70, which is basically, I'm going to round that up to $2 and let's call it $2.54. Okay? $2.54. Now, how did I figure that out? $2.54 is basically where it is. Well, it's at, oh gosh, I wish I can't move this there. There's 74 right there. Let's call it 252.92. Round that to 253. Divided by 100 is 2.53. Okay? 2.53. Now, I take that 2.53 and I add it to 420. 4.20 plus 2.53 equals 673. 3. There's the math, and that's about as difficult as it's going to get. I know it sounds weird, and trust me, folks, I'm going to do this plenty of times when it comes to all sorts of different combos as we move forward in this progression. So $6.73 is the expected target when it comes to 14 days. Now, this can change. This will change. Whether maybe it hits it in 3 days, maybe it hits it in 8 days, maybe it hits it in 21 days. It doesn't matter. It doesn't matter. This is just a gray area to plan your attack and trade based on what's in front of you. Now, folks, I'm going to give you this. I position size everything to max loss. So in order to do max loss in this situation, you have to. It can't be 0. It has to be 0.01, meaning 1 cent. And what that does is it gives it the ability to say, okay, it's basically 0, but if you divide everything by 0.000, it's going to be 0, right? So it has to be 0.01. However, let's go back to this. If you folks want to use protective stops, let's go to the chart. Let's say that, okay, in the same 14-day period, let's say that this bad boy decides to break below, just give me a number here, right around there. Let's say that it decides to break 68.68. Well, let's call it 68.70. Okay, if it breaks that point, what is the is the option going to fall and what it's worth? So let's go back to analyze, and I can now set this lower strike price or this lower price slice, 68.68. There we go, and use that same graph. Right, I'm using the same graph for the same 14 days, keeping all things equal. If I get stopped out, I'm going to lose 175.14. Let's call it 175. Okay, I know I'm moving this as I'm talking. Let's call it 175, which is $1.75. We take that $1.75 and minus from our cost basis of 420 minus 1.75 equals 245. Let's go back to our trade bench. And if you want to put a stop in, you'd put it here, 2.45. Oh, now I hit enter, folks, and this might actually go to the next screen. I shouldn't have hit enter. I should have just clicked the mouse. We'll see if it does. It looks like it hasn't yet. Oh, it did. So see this trade plan successful. That's fine. All we have to do is go back to edit. Once again, this is just a software that takes in data. And we can take a look what we have. Plan entry price 420, plan target 673, plan stop 245. This is going to basically take what you put in for the broker as a default system, meaning, okay, if it was 2% risk based on the commission, so on and so forth, it's going to spit these numbers out automatically. So all these numbers that you see here on number 5 is going to be automatically. But here's the cool thing is we can now change these. So I know this thing's going to cost me $4.20. Let's say that I've got a maximum risk of $500. Well, I can't do 2 contracts. I can only do 1. So I'm going to type in 100 and click the mouse, and it's going to say that my total risk amount is 190 because of it's taking the 420 minus the 245. Okay, folks? This is taking into consideration with the stop, which means if my risk is actually 190, I could probably do 2 contracts. Now I'm at 380. Let me see what 3 contracts is. Oh, 570. I've exceeded $500, so I can do 2 contracts, which is 200, and that says 380. My commission entry is $15. Commission round trip is double that, so total cost including commission round trip it's $870 for the position. So that's one way to do it. Now let's say we go back to max loss, because that's what I do. So this says, dude, your risk is just way off based on what you've set up parameter-wise. You can just supersede that. Let's go back and let's set it to 100. There we go. Now, I'm doing 1 contract. I'm risking $435. My commission is $7.50 because of it's $6.95 in and out, and then 0.75 per share. So $435 is what this thing's going to cost. So there's my position. So this is a little bit better for me because I like to position max gain, max loss. But did you guys notice that you can position using stops? I chose not to. Now the next thing, and this is what's really cool, and you guys learned about labels when it came to the Market Masters. The market masters are your charts. Ascending triangle, look at what I got here. Bear rally, bull pullback, consolidation, descending triangle, double top, double bottom. You can add whatever you guys want. Here's something I added. Symmetrical triangle break down and symmetrical triangle break up. I thought that was kind of cool. You can have literally, and I hope you don't have 100 of them, but you can have lots of these things, because the more specific you are, when you go to recall all of your performance, it gets really, really, really cool. And here's something great. Let's say that you and I are setting up a trade here. Let's do this. Let's go out here. Let's go back to the chart. And we realize this is a high base breakout. To me, it's a high base breakout. I'm waiting for a high base to break out above a certain area, and I'm going to set it up. So it's already there. Let me go back to this. It's already there. I've got a check for a high base. It's right there. Boom. But let's say you don't. Let's say it's some weird symmetrical triangle to the upside. You can add a label at any time and type that in. And it'll add to the labels for the rest of all your different trades. So, and now I can add whatever I want. In this case, guys, I believe, let's see, plus 3 weeks, turns. Okay, I think we were waiting. Let's do this. We were waiting. Let me get my underline off, because we don't really need that. Or you could have it underlined. I don't really care about that. There we go. Waiting for a breakout. Breakout, one word, who knows? I don't know. Above, I believe, let me triple check this, guys. Above the 71 level, right? Let's call it that. Oops. Above $71. Okay, now I can submit this. Now when I submit this, it should just place it as a trading plan. We're going to see what happens here in a minute as it just renders. There it goes. So I have an existing trading plan on CERN, which is a July 19th, 67.5 call. I want to buy this thing, one contract at around 42 bucks, based on my outlook, and this is everything that's going on. So now I can just go on to the next and set it up, so on and so forth. But let's say that it went ahead and it triggered. So I can just go ahead and hit add order. And this says proceed to order entry, meaning this thing's triggered. I want to submit it as a trade. Now let's say that we're a little bit late on this. Let's say that it went a little bit further than we expected. Let's go ahead and say that, hey, it's a little bit higher. Folks, I know I'm a little bit ahead of myself. Let's say that instead of paying $420, we had to pay $430 for it, so on and so forth. It doesn't really make a difference at that point, but it tells us, okay, what's the date? What was your order quantity? It's still going to be 100, right? Because we're doing this based on share price. And the fill price, let's say, folks, I apologize. It's going to be 430. We added a dime to this, didn't we? So it's going to be 4.30. So it takes into consideration what the trade was. You could put in 420 if that's what you triggered in, but it's still, the math works the same across. It said entered due to trigger above $71. Submit. Now what we have here, folks, is an active position right there. Now, folks, you can see I've got a couple above it, one above it, one below it. But here's the cool thing is we have an active position. Quantity, 100, which is one contract at 430. I wanted 420, but I paid 430 because I waited for it to confirm. Now, couple things we can do here, guys, and I'm going to go ahead and see if I can't get the pen to work because you need to see this separately. We can add position. We can add another contract. We could add more shares. We could do whatever we want by clicking on Add Entry Order. This is how you close the position. I'll put an arrow to it right there. Add Exit, and that'll close it. When did you get out? So on and so forth. You can actually increase your target. You can add a stop loss. We can edit this as it progresses based on whatever our trading plan says to do. It's really, really, really cool. It's robust. Now understand, folks, this is literally just a tracking software. It is what it is. Another thing is we can look at the strategy. It's a long call. We can add a label. So I clicked on labels here, and it's like, you know what? Not only was this a high base, it was also a breakout to new highs, which once again, we could add that and hit save changes, so on and so forth. You can do whatever you want. You can view a chart from this at any time if you import it. And I'll show you how to do that when we go to close it, because, folks, importing a chart is very, very easy. And it's easy to do when it comes to getting in or out. So let's do this. Let's go to the next example I want to give you, which is basically the put side. Same as the call, just opposite direction. So here's our position. We're in. Everything's totally great. You could have added that to. Let's do this. Let's see if I can. Usually there's an edit button, but I don't see it here. Okay, we'll do it on the next example. But anyways, you can import a chart at any time. I'll show you how, especially if you guys are using Google Chrome. All right, so that is the long call when it comes to developing a trading plan that has not triggered yet. Then once it triggered, I showed you how to pull it up from existing plan and trade it. I'm going to do something a little bit different here. I'm going to go to a trade plan without. So it says enter trade without a trade plan. Now this is something that you're going to build the trade because it's already in. Let's say that you and I got into a trade. It's already in. It's already active. I just need to record it. Now, folks, I'm going to tell you right now, 90% of the time you're going to be using this. And I know it throws you off because it says, whoa, I'm trading without a plan. That's not true. Your plan had to be triggered. It had to get above or below or based on what you've built, your trading plan is. But when it comes to entering in a Tradebench, you simply click on without a plan. And now you can put it in directly. So we'll go from there. Now, the first thing I want to do is let's go back to configuration. Let's go to strategies. And we got to see if we have a long put strategy. I'm going to hit edit because we do. If you don't, you just had add new, type in long put, type in whatever you guys want. We're gonna go ahead and use and build another checklist for long put. But did you guys see how I cut and pasted basically the long put criteria? This is going to be by 3 weeks out, strike price delta still greater than negative 0.60. You know, it's the same thing. It's opposite, so it's going to be less than. And then our open interest has to be greater than 100, so on and so forth. So it's the same thing, just inverse. Now, one other thing that I thought I would do, and I thought this is actually pretty interesting based on what I'm seeing right now. Let's go ahead and add another checklist, or excuse me, label. Because you know what's kind of cool? You know what? Let me go back because I want to show you what's really cool about this. And we're gonna use this moving forward. Okay. Do you notice how we have the rankings? We have +1, +2, -2, -3, so on and so forth. Why don't we add a label to further identify our strengths and weaknesses when it comes to bulls versus bears versus -1, -2, -3, +1, +2, +3. I thought that'd be pretty cool. So I'm going to show you guys how to do that right now. And what's really cool about that, it doesn't take very long. Okay, so I'm going to go to configuration, labels, and I could add this anywhere I want. I can add these as I'm going through the as I'm doing a setup individually. I could add it after it's edited, so on and so forth, but let's just go ahead and add it. So I'm just going to go ahead and add, and I want to do this. The first thing I want to put on is bear. Submit. The next thing I want to put on is bull. And then I'm going to start with my +1, +2, and +3. Now, folks, before I got all the questions, why am I doing these individually? Let's do a -1 and -2. And the answer is this. If I do them individually, they can be scanned for individually. I can pull up the criteria individually. So what if I put in bear -1, -2, -3 as one label, and then I put in bull +1, +2, +3 as one label? Well, guess what? Individual labels allows me to know if let's say I selected bear bear -1, and then the next trade was bear -2, and the next trade was bear -3. I can differentiate. If I select bear, the word bear, without the numbers. It will pull up all my bear trades and tell me how I did overall. But let's say that how did I do on my bear negative threes? If I select bear negative 3, it'll tell me on all the bear negative 3s how I did. So the more specific you can be with labels, and the more we check labels, the more specific we can be when it comes to pulling up results. And guys, that doesn't mean a whole hill of beans in your first 10 trades, but after a year, it'll be really cool to say, how did I do on my descending triangle bear negative 2s? That's pretty killer, right? Versus just my descending triangle bears, which would be negative 1, 2s, and 3s. It couldn't differentiate that. So make sure you add your labels individually and then just check them as you go. So I've added these just for fun. So let's get to our first bear trade. So in this case, I'm not going to use an existing full trade plan because I'm not going to build this up based on, hey, it might happen. I'm going to say this is a trade that's triggering right now. That being said, you can see there's not too much differences when it comes to the template that you have to fill out. All my strategies are here. My brokers are here. And look, check this out, folks. All my new labels are here as well. Pretty killer, right? The only thing we're going to have to do is we might build some checklist for the long put as we go through. So first of all, let's find something that we can trade. So I've got a trade here. It is... let's see if I can find it. PTLA. Let me get the chart up so you guys can see what I'm looking at. Okay, now this one, it was triggering earlier today, but for me, I think it's below to where I'm just going to get into it anyways. I know this is kind of a weird, strange situation, but I like the fact that it is definitely below the support of 28, and we'll call it 27.90, and it's breaking the 200. I'm just going to go ahead and get into it as a straight up put. I'm going to go ahead and use for, Fibos are fine. So I'm just going to go ahead and use my Fibos. And I've got a target here about 24.68, right? So let's run through all that, all those things. So I've got 24.68. I'll leave this here. Let me go to the analyze. We got to buy greater than 3 weeks, which has to be July. And I need a delta. Let's over to my delta of over 60. Now I'm over here, folks, because I'm doing the puts. So I need to see 60, and I've got a delta right here of 61. So I'm going to focus on that 30. Looks like I got a 330 by 360, so that's 30 cents. I can cut that in half. I'm going to see if they'll give me 345. Excuse me. So I'll go ahead and buy this thing. Let's go to the risk profile. I'm going to change this thing to a couple things. I'm going to see if I can't get 345 for it. Ooh, it looks like it moves in dime increments. So let's try 350. And let's knock this down to 1. I knocked this down to 1, folks, because when you're running these numbers, it's much easier to deal with when they're 1. So let's go back to the chart, and we got to decide if my target is indeed 24.68. Let me go back to the analyze and type and put my first well, I'll put this lower one. What did I say? 24.68, 24.68. Let me triple check that, folks. Yeah, 24.68. So my first, this is going to be my target, right? And then if I want to put a stop on there, let's take a look at that since we're here. Ooh, stop's going to be pretty high because I probably want to above the previous high there, that pivot point. Let's call that 30.89. I'm just using the Fibo. It's where I drop the line. It's arbitrary, folks. You guys can make it as specific as you want. There. Now I've got a target, I've got a stop, and I've got current, right? The next thing I need to choose is time frame. This is a big one. All right, guys, this is a stock that seems to move about, I'm working here. Oh, I can't do it without that cursor. Let me see if I can move off of it. So it doesn't change price. It will. Anyways, currently $1.37 a day. Looks like the markets might roll over if it can break support. Anyways, to get from 27.62 where it's at right now down to 24. What's that? $3? $3. It shouldn't take more than 2-3 days. I'm going to go ahead and give it about a week, right? We'll give it a week. So I'm going to go back to analyze. Now, folks, once again, you can agree or disagree. It doesn't matter. This is the cool part about this is you find what works for you. So today is the 4th. And a week from today, let's give it 7 days. 7 plus 4 is 21. Let me try that again. 7 plus 4 is 11. So let's see what the 11th looks like. So I'm going to go ahead and move. Okay, cool. So I already have that in there, 6, 11, 19. That's kind of where I'm aiming for. So I'm going to go ahead and put my cursor up by 2468. And I'm going to focus on this turquoise color, or the bluish color, if you guys will. Don't know if you're colorblind like me. And it looks like I'm going to get about, and this does move, folks, so get close, $215, so $2.15. So now that's a gain. Once again, folks, I take the $3.50 and I add $2.15 to it to get a target, which is $5.65. If you guys don't know what I'm talking about, review this class a few times and it'll make more sense. So I'm going to write that down. $5.65 is a target. What I got here, folks, was it $3.20 as an entry? Yep, or $3.50. $3.50 is an entry. All right. And now, if I really want to, I can use a stop. Let's see if we implement a stop or not. So the stop was all the way at $30.89, which, let's go back to the analyze. I moved it to $30.89, and it looks like in that same, once again, 11th is what we're looking for, period. It looks like it's going to be a loss of $168 or $1.68. So what I do is I take 1.68 and I minus it from 350, which means $1.82 would be the stop. Okay. Now, if you're like me, I wouldn't use the stop because I like to position size everything for max gain, max loss. But hey, at least we have that information. Now, this becomes easy now. Once we built it, all we have to do is type it in. Now, folks, what I did here is I said trade it now because I want it now. I'm not waiting for it to set up. I'm just going to get into it right now, and these are the numbers I got it. So let's say I physically entered the position. This is the best way to do it. You go to Trade Plans, and it says without a trade plan. Now, without a trade plan doesn't mean you're not using your setups. It doesn't mean that you're not following your rules. It just means that you're going to don't do a preempt, meaning set it up in case it triggers. I'm trading right now because this is a trade that I'm in. It's triggered. It's over. This is what, like I say, you're primarily going to be using most of the time. So let's go ahead and type it all in. Now, folks, the symbol is going to be PTLA, and then I put a little dash because you need to get more specific. Now, folks, you can enter the specific stock. And once again, this isn't geared towards stock or options. It's geared towards stock. If you put in this ticker symbol and then you start to put in premiums with the options, it's going to totally confuse the software. It's not going to know what's going on. Especially there's this one caveat that I have to show you guys moving forward. So entering it this way is much easier. Also, if I enter it this way and you go to scan for bulls, bears, high base, low base, bear call, long calls, long puts, so on and so forth, and you see the description in the symbol, meaning PTLA, well, let's put it in. It's going to be PTLA July 2009 or 19th, 2019. These were the folks. What puts were they? Geez, I've been talking in circles here. So go to analyze. It's going to be the $30 puts. Right. So I go back to this $30 long puts. What's awesome is, do you see this description here? It's easy to differentiate what it was because you can also scan by date. So you can see over to the right, directly to the right, it says date, quantity, price, commissions, target, stop. It says 4 June 2019 at 16:02, which is 1 o'clock, 1:02, or excuse me, Eastern time 4:02. So you know exactly when you do it, but then you could relate to the fact that it's a PTLA, but not only PTLA, it was specific to the long put, the $30 long put in July of 2019. It's much easier to do it this way when it comes to recall. So multiplier, once again, you could put as 100. I like to leave it as 1. Let's use my Thinkorswim account again. Now, here's the catch. This is a long position. I repeat, this is a long position. This is where I'm going to get 1,000 emails. This is a long position because you are buying the put. Anytime you purchase a strategy, it is long. Anytime you sell a strategy, it is short. Direction has nothing to do with it. I repeat, direction has nothing to do with it. We have compensated for that when it comes down to the tabs. Okay? This is a put, so you're going to select long because you're purchasing the put. Okay? The math does not work because it doesn't understand that up is down and down is up. So select long. Then you come down here and say put. Now we know it's a long put. Here's something else that's cool. Let's say that I had a -2 outlook and it's bearish. And in this case, folks, let me go to the chart. Let me get rid of these little fibos. Let's how about a low base breakdown? Okay, awesome. We'll add that. Low base. Okay, so now I've got a -2 outlook. It's a bear, and it's a low base, and it's a long put. So even though this says long, you know if you scan for bears, this will come up. It's a low base. It's a -2 outlook. Use the long put, so on and so forth. Let your labels guide the data. Okay, I'm just going to put in entered with a breakdown. Breakdown below. Sorry, folks, I can't spell. Below support. And then you could add whatever you wanted based on the outlook, the sector, the markets, the top-down approach, what you don't like about the CEO personally, whatever you want to put. It's all in there. Now let's go over here. Date and time should default to when you start to build this. But if you guys want to adjust this, it's all in military time. You can do whatever you want. So my order quantity is going to be, in this case, it was, I got to figure out my numbers here. I can't do 2. I got to do 1. So I'm going to go 100. My fill price was $3.50. And it automatically puts in commission entry and all that because of the commission based on what I've preemptively put in when it comes to Thinkorswim, which you guys know from previous videos. My target price, now once again, guys, this is going to be based on the chart. So let's go to analyze. My target price was to $24.68. And, I already did this, but anyways, I ran it through the numbers. I took the value of this and added it to my cost basis, and I got $5.65. You guys remember that? So I'm going to put 5.65 and a stop loss. If you guys aren't using a stop loss, it's 0.01. Okay? 0.01. If you're using a stop loss, then just put the stop loss in. Let's our stop loss came to $1.82. Now when I click that, it's going to take into consideration the difference. So you guys can now position size based on this new risk. So if this thing's going to be $3.50, I'm going to minus the $1.82 from it, and I've actually only got a $1.68 risk. So if I've got a $1.68 risk and I'm only going to position size $500, I could actually buy, let's see, times 2, I could actually buy almost 3 contracts. $1.68 times 3. Yeah, I can buy about 3 contracts. So, figure it out and go ahead and do that. Now, what's really cool about this is it just takes the numbers for what it is. I'm going to go ahead and put this back to 0.01 because I'm not putting a stop on it. And then I go ahead and hit submit. And you'll see that it's going to post it as this is your trade. Scroll down to, which one was this? This was PTLA. So here's some other trades. This is the one we did together. We did the CERN, which was the bull, and we did the PTLA, which is the bear. Now I need you to understand these are both long. Both long. Why? Because we bought the position. This is where it gets crazy because if we do not put it in Tradebench as a credit versus a debit, it's not going to be able to differentiate it. You purchased the put. When the stock goes down, the put increases in value. You guys need to get your head around that. Watch this video 10 times if you have to. Okay, because as we go forward from here with the vertical spreads and the diagonals and the calendars and the ratio spreads, it's all going to be the same. Long is purchase, long means debit, long means you paid for it. Short means it's a credit, short means you want it to decay, not necessarily go down, because decay can happen upwards. It's just decay. So credit versus debit. Long, debit, credit is short. Direction will be in the tabs, and we'll hopefully I can talk with you guys that further. All right, thanks for joining me. If you guys have any questions, you didn't know how to help, you know how to, you know where to get a hold of us. So let us know. And once again, watch this video a few times. Get out there, practice, 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 and we'll see you next time. Thank you, everyone.